You are tuned into Wolf Trader Radio. This is your daily podcast provided to subscribers of the S&P 500 newsletter service. Let's dive into your S&P Market Update for Wednesday, September 20th, 23. Headlines: Fed holds rates steady at FOMC meeting today. Astro and cycles are rolling over negative. Fed Juice 3.0 is in a sell. The longer-term Fed internals are now in a sell. Wolf Trader Wave confirmed a sell through December. We are short Russell for medium-term short. Synopsis: The S&P market is selling off after the FOMC decision. There's a sense of caution in the air as astrological and cyclical indicators are pointing to negative trends. The Fed Juice 3.0 is signaling a sell, and the longer-term Fed internals have joined the bearish sentiment. The Wolf Trader Wave has officially confirmed a downtrend extending through December, adding to the concerns. Astrological signals suggest ongoing selling pressure. Short-term wild cards. Recent market reactions to geomagnetic storms have been quite negative. September may bring larger storms to the S&P, which could lead to more significant damage. NOAA recently reclassified the geomagnetic storm that crossed Earth on Tuesday as a G3 storm, further fueling bearish sentiments. Equities are expected to remain depressed for at least a week, with small-cap stocks showing particular weakness. G3 storms have historically marked major market topping points. Short-term trading systems. We'd like to highlight the launch of PRS version 33, operating at full intensity and designed to handle high trading volumes. The system employs tight stop-loss strategies to manage risk effectively. Auto trading continues to maintain short positions on the S&P, NASDAQ, and Russell. Additionally, we've developed an intraday bet trading strategy to trail stops lower for open short positions, especially in the event of a market crash. The Bollinger Band width on the 12-hour timeframe is expanding for Russell, S&P, and NASDAQ, indicating the end of the consolidation period and the beginning of a new downtrend. Medium-term trading systems. The Fed Juice 3.0 is in a sell, and the Fed internals are weakening, marked by a negative divergence that began at 42.78. This suggests the S&P may retrace down to that level. The Planetary Speed Index is now signaling a buy, but the Quad Lunar is heading into a sell today, which will likely lead the Astro push lower. Notably, the VIXI/S&P Wolf Spread Trader has shifted to a bearish perspective, now long VIXI/short S&P. Similarly, the NASDAQ/S&P Wolf Spread Trader is shorting NASDAQ and going long on S&P, indicating a significant shift toward an emerging downward trend, with NASDAQ potentially leading the way. Medium-term forecast models. Today, the CAT Master, a forecasting model combining natural cyclical forces from 4 systems, is peaking and expected to head lower for the remainder of September. Long-term forecast models. The Bradley Barometer is on a declining trajectory through January 2024. Additionally, the Wolf Trader Wave is projected to fall through December 2023. Long-term outlook. While the long-term outlook for the S&P remains bullish, there's been a sharp and significant decline in the Fed internals, the sharpest since the rally began in October. The fate of the market in the long term is heavily reliant on the Fed Juice and the Fed internals. A chronic decline in the Fed internals could potentially alter the long-term bullish perspective. It's important to note that the market has reached extreme values, increasing the risk of a severe flash crash correction, with this risk growing daily. Multiple indicators are warning of ominous events looming into September and October. The US dollar Fed Juice is now indicating a buy, which may create headwinds for equity markets. While shorting equities has been challenging due to multiple short covering rallies, it remains a possibility as long as we navigate the Fed Juice accurately. In summary, the S&P market is showing signs of a downturn, with the Fed Juice now in a sell mode. The longer-term Fed internals have also turned bearish for the first time since October 28, 23, indicating the likelihood of further retracement lower as the S&P relies on Fed Jew support. A significant negative divergence in the Fed internals at 42.78 adds to the concerns. The market's extreme values have escalated the risk of a severe correction, possibly in the form of a flash crash. Numerous indicators are suggesting ominous events in September through October. The US dollar Fed juice is now indicating a buy, potentially creating headwinds for equity markets. A strong G3 geomagnetic storm that passed over Earth on Tuesday is expected to depress the equity market, especially the Russell, for the next week. G3 storms have historically marked significant market highs. Coupled with weakening Fed internals and declining astrological and cyclical factors, this points to the path of least resistance being lower for equities in the second half of September. For more information on how to sign up for the Wolf Trader S&P newsletter, please visit https://www.wolftraderfutures.com/plans-pricing. Thanks for tuning in to Wolf Trader Radio.